As the world contends with new strains of the virus and certain countries are in extended lockdowns, there's plenty of problems that are going on in the world that we're having to deal with. But there's a new problem that's becoming a bit too big to ignore now, and that's the rapid rise in shipping costs that's actually affecting certain areas of the recovery. So let's start with China. It's been one of the only major economies to actually see economic growth in the last year, as GDP data came in at 2.3% for the year 2020. It may be that it's its weakest growth in 40 years, but given how other major economies fared over the past year and how China started the year, it is a pretty impressive turnaround. In fact, the economy even expanded at its fastest pace in Q4 since 2018, so even faster than just before the pandemic. Consumer spending in China is still pretty low, which is resulting in low inflation, but the economic revival was made possible by higher industrial production and increased exports, particularly for medical equipment and the sort of goods you need for staying at home to work, such as computers and things like that. And adding to China's incredible growth, over the past 3 months, we've also seen China's biggest ever trade surplus. It's at double-digit growth month on month, with little sign that demand for Chinese goods is about to slow anytime soon. So as the world recovers from the pandemic, demand is actually expected to increase even more, as successful vaccine rollouts would allow industrial production in America and Europe and other places to get back up and running again. Now, as much as I'd love to go into all of the details about China's recovery, how it's been happening so far and what could happen next, there's another more pressing concern that threatens the future of not only China's economic growth to a certain extent, but also major importers of Chinese goods, especially in Europe. Now, this might seem like a very unlikely suspect to strangle global recovery, but one of the major bottlenecks right now is with shipping containers. Yes, those big rectangular metal boxes that you typically see stacked on ships and things like that, well, they might not seem like much of a big deal, but they are an important cog in the international trade machine. So if we look back to November last year, the cost of moving a 40-foot container from Asia to Northern Europe was around $2,000. Today, for the exact same thing, we're looking at around $9,000 for the same routes. That's more than 4 times the cost. And this isn't just an issue for Europe either. The World Container Index, yes, that is a real thing, has seen global prices up 194% from a year ago. So it's a rapid price increase. And this comes as a result of the disruption to international trade throughout the past year. And it's left China in short supply of containers to move goods in, with huge amounts being left in the US and Europe. So Economics 101, short supply, increasing demand, inevitably it leads to higher prices. Now, the high cost of shipping is becoming more of a problem for Europe than it is for America at the moment, as rates to the US have stalled since October when the Chinese government told shipping companies to actually cap the shipping rates to the US. Shipping containers aren't the sole blame though. The sudden increase in demand is also creating congestion at ports. Shipping companies need to charge more to account for the waiting times, which is also inflating the problem. And in the UK's Association of Manufacturers of Domestic Appliances had seen members report increases of up to 300% in shipping costs since the beginning of last year. And one freight company said that some customers were paying up to $12,000 per container. There are even reports that once the container has hit the mainland, road haulage costs have also more than doubled in some cases. And you know, this shortage of containers doesn't only result in price increases either. IHS market data showed that there were the worst delivery times since last April, which means that companies are having to wait longer to receive their orders. So for manufacturers, this means supply shortages, and for consumers, it means there are likely to be increased costs, which they're going to have to bear, which could lead to a temporary rise in inflation for certain products. Now, a number of experts suggest that this problem won't be resolved anytime soon. At least the first half of this year is still going to continue being a problem, although China has been ordering more containers. But it comes as a bit too late, and we may see even higher shipping costs to Europe, perhaps even to America as well, over the next few months. So, my question is there actually any aspect of life or business that has remained normal since last year? Well, at least I haven't found it yet. It seems like everything in every corner of every industry seems to be disrupted right now. Maybe no surprise. Anyway, thanks for watching. I'll see you in the next one.